morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, we are going to look at the two largest listed conglomerates in Trinidad and Tobago to give us a sense of what is out there for investors going forward, as well as what do these conglomerates reflect for the economy at large. Let's look at our first graph to see what's happening with regard to Neil and Massy. Try again. Okay, so here it is. What we are seeing is that revenue growth is somewhat tepid, and revenue growth in any event would be somewhat distorted by what is happening with the currency adjustment, the depreciation of the TT currency. So you can have a blip suggesting increases in revenues, but that is only in part a reflection of what's happening with regard to currency. But more importantly, what is happening? What are the critical factors? What are we seeing? We are seeing that while profit before tax is somewhat improved, very flat, but while we are seeing that factors are taking place that are impacting this line, the profit after tax line. Profit after tax for Massy down 18.3%, and earnings per share falling for the 9-month period from 368 per share to 298, or some 70 cents on 19%. And even if you take into account discontinued operations, the earnings still falling by some 5.5%. What does it mean? Clearly, when we look at some other segments of Massy, what are we seeing? Profit before tax. Very important to note, first of all, if you look at the blue bar, what you are seeing is a significant fall off in the profit before tax for the automotive section of Massy. And that also, while retail, integrated retail is holding its own, and it's just a bit higher than the last period, what you can see is that apart from automotive, not shown on your screen, would be the declines caused by discontinued operations. The IT firm in Costa Rica being sold, as well as the telecommunications company, which has been sold to TSTT, starting at $250 million and closing that deal at $215, resulting in an overall loss on these discontinued operations of some $70 million. What else can we say about the Massy profit situation? Let's look at its distribution in terms of revenues as well as profits across the region. I think most importantly you would see is that Barbados constitutes a significant proportion of Massy's earnings before tax or profit before tax. It's down from 24% to 21%. And we all know of the challenges that is being faced by the Barbados economy, and it is going to impact Massy as we look forward. Other things that are good to note is the diversification is when we compare with Ansa McAL at a later stage, diversification across the region seems to be better, as profit before tax from Trinidad is just about half, whereas Barbados, it's about 20% to 25%. But look again at Guyana, a growing economy, and you see it's about 14% of Massy's earnings, as well as look very closely at Jamaica, which has had 9 consecutive quarters of growth, and that is impacting the economy. What's our outlook? Well, when you look at our outlook, we'll come to this in a bit when we look at all the players. Our outlook is neutral in terms of Massy, trading at about 11.1 times earnings, good dividend, just over 4% dividend yield, and we maintain a neutral. Stock is trading at 48.95. Let's take a quick look at McAL, and what is happening with Ansa McAL is that operating profit before tax is falling down by 6%. This is for the half year. And taxation has played a very important impact in impacting earnings per share and profit after taxation, particularly because for these conglomerates, one, the business levy and the green fund levy have caused taxes to raise up to the extent of 34 to 36%, before down at about 32% or so. So this is what you are seeing. In the case of Ansa McAL, financial sector has done very well for both companies, Massy and McAL, Ansa McAL, but what you see is a decline in terms of earnings per share in the order of 15% down. Let's look at the revenue figures and see what's happening there in terms of the revenues and profits. What you see is that, again, in the automotive sector, which constitutes about 41% of the overall sales of McAL, it's still contributing only about 11 or 12% of profit before tax. So the distribution, when you look at manufacturing, good solid base in terms of manufacturing, holding its own. Insurance, we talked about the financial sector, up quite substantially, but the other areas remain somewhat tepid. What can we say then as we look at some of the other factors? Well, Ansa McAL's revenue is heavily skewed to Trinidad and Tobago, some 3/4 of its revenue. But important to note as well, there is a component of Barbados, which is about 15 or 16% of revenue. That's something that we have to look at. And so that when you look back, what we are seeing is that both companies, we maintain neutral on them. But I want to go back to show you a comparative, if I can get it, of both companies in terms of some of the imperatives. And here, it should be here. Okay, when you look at price to earnings, Massy versus McAL, there is Massy is 11.1 versus McAL 16.5. It means that the price earnings of McAL is much higher, and there may be headroom for Massy. Market to book, when you look at Massy versus Ansa McAL, you see Massy is trading at about 1 time, McAL at 1.7 times. The trailing dividend, Massy is 4.3 dividend yield versus Ansa McAL 2.3% dividend yield. And the dividend payout ratio is Massy 48% and Ansa McAL 37.6%. More headroom for Massy? Possibly. This is your Bourse report. Have yourself a wonderful investment week, and look for us on the newspapers for our various mutual funds that have been performing relatively well in terms of India, Asia, as well as an improvement in Brazil. Have yourself, again, a wonderful investment week. This is Subhash Ramkilawan for the Bourse report.